Hey everyone, welcome back to the channel, your number one source for income-oriented investing. Time to go over the high-yield, income-oriented landscape on the Canadian stock market. The US stock market episode, of course, will be coming up in the next video for my American friends and for you Canadians who invest on the US stock market in your RRSP, of course, or your Lira to avoid that 15% withholding tax. So guys, let's go over what the markets have done in the last month. It's been a pretty good month. And by the way, for the record, I am filming this on June the 5th. So the last month, the S&P 500 up about 5.5%, pretty good. NASDAQ even better, just under 9%. Canadian stock market kind of follows the S&P, kind of a little bit less at just under 5%. Bitcoin is doing really well as well. Gold as well. Gold has done really well lately. 9.63% Bitcoin. Maybe next time I'll get the gold one ready. But hey, Bitcoin, gold, just increasing in value because the dollar is losing value, which it will do forever. All right, so before we continue, I'd like to thank this sponsor and good friend of the channel, Harvest ETFs. And in case you didn't know, they launched a really cool and innovative ETF related to Bitcoin, the Harvest Bitcoin Leaders Enhanced Income ETF. I really found this was a great idea. I added it to my portfolio. It's going to be a core position in my personal portfolio to give me exposure to Bitcoin. The yield is extremely high. It's double-digit yield, over 20% yield right now based on the latest stock price. And what this ETF does, it holds about 15. It has 15 holdings. And these could be Bitcoin itself is in here, IBIT is in here, but it's all companies related to Bitcoin or that have Bitcoin exposure. So you have Coinbase, Block, Galaxy, Marathon, of course, MicroStrategy is there, and a bunch of other crypto Bitcoin miners. And what they're doing is that they're writing covered calls on these stocks, which of course are much more highly volatile than the NASDAQ 100 or the S&P 500. So this is why they're able to generate such a substantial monthly distribution, currently at 33 cents a month. It could vary, of course, you never know. Distributions when it comes to covered calls could always go up, could always go down as well, so they could fluctuate. But this is a very innovative way to get yourself diversified exposure to Bitcoin, if you will. So make sure to check it out, everyone. And of course, if you just want the Bitcoin itself, they also have a pure Bitcoin covered call ETF, HBIX, where they are writing covered calls on the IBIT ETF, the BlackRock IBIT ETF. So again, once again, thank you, Harvest, for sponsoring this monthly series and being a good friend of the channel. Moving on now to what I like to call the Great 10. Of course, you saw the video, guys, the recent video called the Great 10. These following Great 10 currently, in my opinion, are really good buy and hold positions for income investors where they could be, core positions, and they all have the same criteria. They're income oriented, they're diversified, very important, that criteria, right? They're diversified, and they could make up, they all use a little bit of leverage as well, 25%, except for BMAX does 33 and EIT does 20, but most, it's pretty much 25% except for those two. So covered calls, income oriented, leverage, diversified. So these 10 you could select to make the core positions of your income portfolio. So let's start with the high income shares by Harvest ETFs. HHIS is going to be part of that Great 10 because it's diversified, because it actually includes all soon to be 15 stocks, and number 15 is going to be Apple, and it hasn't been added yet. It didn't come out yet, but just like the webpage says, it's going to come out in this month in June 2025. So it's probably in the next couple of weeks. The Apple single stock high income share is going to come out. It's going to be added to HHIS. So HHIS doing very, very popular, almost at 400 million AUM, which is extremely fast. It's gaining assets, and it's been a steady 25-cent a month distribution, and that hasn't changed for HHIS, although the single ones inside can fluctuate, like recently the Broadcom, Netflix, AMD raised, the Tesla one reduced. So you got to expect varying distributions. And by the way, guys, I'm going to have a monthly series where every single month I'm going over these high income shares to give you an update on which ones increased, which one decreased, and we'll try to figure out why as well in that monthly series video. Next, we have HDIF. This is Harvest's all-in-one solution, more of their classic which is an all-in-one, which includes their covered call ETFs. The yield is just under 11%, a very, very solid and steady distribution. This is also part of the Grade 10 and HBIE as well. This is if you really want that 60 stocks, 40% bonds. You guys know that personally I'm not a fan of bonds, but in case you absolutely want that and you're an income investor, you want that 60-40 split, HBIE could be one to consider. And by the way, it is leveraged 25% and the yield is actually very close to HDIF as well. Moving on to Hamilton ETFs, of course you have H-Yield and HDIV, which there's no news on those. The distributions have remained steady, same as last month. But the big news out of Hamilton ETFs, of course, I always get those mixed up. Both have to start with an H, right? And I literally made a video about this because the news which was so huge. So make sure to check out that video. They will launch Canada's first zero DTE covered call ETFs. Make sure to check out that video, guys, which came out a few days ago. Well, by the time this video comes out, about a week ago or less than a week ago, where I discuss the press release in detail. And you could be assured there's going to be upcoming videos and to learn exactly in detail how these work, what they hold, management fee, everything, hedging or not. Don't worry, guys. All your questions are going to be answered. Hamilton ETFs, of course, a good friend of the channel as well. Always more than welcome to come back on the channel and explain everything. Moving on to the Global X. So Global X, you have USCL, QQCL, and EQCL are part of the Grade 10. So USCL is the S&P 500. And the good news with this one is they re-upped their distribution back to 25.5. So I don't really know exactly why there was a 2-cent drop, but it's back at 25.5. Hopefully it stays that way. But again, guys, you gotta get ready for some fluctuation with the monthly distributions for any covered call ETF, okay? Because premiums vary. QQCL, same story, 29.5, started at 25 cents, then it went to 29.5 starting this year, 27.5 for the May payout, and now for the June 6 payout, it's back at 29.5. So we'll follow and see what happens there. EQCL, which gives you the whole world, is at 22 cents for now. So the yields are about 12 for EQCL, about 15.7. That's pretty high for a QQCL for the NASDAQ 100. To me, it's a little bit on the high side, so I wouldn't be surprised if eventually they have to reduce it a little bit. QQCL's right around that pretty solid range at 14.4. This one may be a little bit too high as well. HYLD, which is kind of the equivalent, it's about in the early 13. So we'll see what happens. Of course, you have BMAX, also part of the Grade 10. Some fixed income in here. The only one that has 33% leverage and the one that has the second lowest yield after EIT. We know that Brompton, doesn't target the highest yields, but they target really good management and returns. And this one has been performing really, really well, right? The stock price has been going up. And they raised the distribution a few times, but right now it's at 11.5 cents, at least until the next couple of payments. So we'll see what happens. We'll see if they raise it or not. But right now at 10%, I wouldn't be surprised if they raise it. I mean, with 33% leverage, and of course with this holding a bunch of Brompton's covered call ETFs, but also the Split Corp preferred shares. I would love for them to add their Class A share ETF to BMAX. And I would get rid of the preferred shares, but it's called multi-asset, so I guess they're gonna have to keep some sort of fixed income. But for this one, I would love for them to add the Class A all-in-one ETF instead of this, just to give it a little bit more yield. But anyway, moving on, EIT, the lowest yield out of all of them because they're not changing their distribution rate of 10 cents a month. I don't know if they're gonna change it or not, guys. I'm not sure. This is the only one, by the way, that's a closed-end fund. Not an ETF. The first 9 were ETFs, but right now the yield is under 8% because the stock price is going up and up and up, and they're not increasing the distribution. But this is really structured like a split share fund, by the way. These are the preferred shares. They have 2 of them. It has 20% leverage, 10% on each preferred share, I believe. Pretty sure. And this is North American exposure, but hey, still a solid fund. Last 10 years, just under 12%. The S&P 500 is about 13, so it's actually pretty up there with the S&P 500, which is impressive because it has quite a bit of Canadian equity in here. It's actually 52% Canada. in this one. So these are the grade 10 or the leverage income oriented ETFs I personally think are really, really good to consider for your foundational core positions. Now we're moving on to the non-leverage ones, just in case you're not comfortable with leverage for some reason. I can't imagine why, but these are, in my opinion, some of the diversified non-leveraged one as well. And then we'll cover Bitcoin too at the end here. All right, starting with BMO's all-in-one. This holds most of their covered call ETFs, which do a rinse and repeat strategy, which I'm personally not a fan of. There's no leverage. The yield is pretty low, just in the 6% range. But you have basically this is the best of BMO covered call, if you will. But personally, I kind of like ZWG the most. I'd rather hold ZWG than this, to be honest, if you really like BMO. But moving on, no leverage ones here. You have Evolve. Evolve has, these are really good, still high yielding S&P 500 and TSX 60, which is kind of like the overall Canadian market, or the S&P 500 of Canada. Covered call ETFs, no leverage, very low management fees, very competitive, and the yield is really high. I mean, they recently raised the distribution for both of them. This one, ESPX, about 11% yield right now. The trailing 12 month is lower than that because it's counting the old distributions as well in the last year. So this one right now is actually about 11%. I think this one's about 10%, which is pretty good. Of course, you have JP Morgan as well. This is kind of it's stock picking within the S&P 500, so I can't say it is, but JP is a favorite on the US side. So they just, same stock symbol, same strategy, same management fee, everything. And these are actually Canadian listed. You actually have JEPI and JEPQ. So JEPI, more of a boring stock picking in the S&P 500. I think I look at it like a defensive S&P 500. JEPQ, kind of the same thing, but on the NASDAQ, but it's a little bit more closer to the NASDAQ 100, a bit less stock picking. But they're not exactly the S&P and the NASDAQ. So with JEPI, guys, you could always expect varying distributions and approximately a 7 to 9% yield. And with the JEPQ one, because it's a NASDAQ, a little bit more volatile, a little bit higher, more than 9 to 11 or 9 to 10% range, something like that. Another S&P 500 actually from Fidelity, FEPI, with a nice, pretty low management fee, which I like. And this one's at about 9% yield, and it's just a rinse and repeat, 2% out of the money on the S&P 500. So if you really like a rinse and repeat, you know exactly what they're going to do. This one is, you could consider it, you're basically giving up, or you're capping your upside every month of the S&P 500 at 2%. That's what it is. It's a 2% out of the money call written every month. There's also EQLI from Invesco. This is equal weight S&P 500. Personally, not a fan. I'd rather have market cap weighted, but you're still looking at a pretty decent 9-10% yield range. If for some reason you want an equal weight S&P 500, you feel like the top 10 companies are making up too much of the S&P, or it's too concentrated, I don't see a problem with that. If the companies are really good, why not have the concentration in the best companies? That's what I say. But anyway, you have an option here in case you want equal weight with covered calls. And then you have QQCI, which is the pure NASDAQ 100. And don't forget, Invesco is the one who manages QQQ. And just for fun, if you're wondering how QQCI is doing versus JEPQ versus QQCC, which is the unleveraged version of QQCL, seems like QQCC is beating everyone right now, by the way. So just wanted to give you that information. QQCC is currently beating QQCI, the Invesco one, and it's also beating JEPQ, by the way. So if you want a absolutely non-leveraged NASDAQ exposure, right now QQCC is, of course, the winner in terms of total return, but I would always go with QQCL. Personal opinion here. There's also PDIV from Purpose, which is very high yield. I'm surprised the yield is this high and they didn't reduce the distribution, but this is North American, so this is a good way to get like Canada and US in one. I personally like HDIV better, HDIV, because you get approximately the same yield, maybe a little bit less, the same fee, but it has that leverage and the return has been much better. Don't forget, Purpose also has the yield shares, just like Harvest. They have the yield shares on a bunch of single stocks. The main difference, it's hedged to the Canadian dollar. The Harvest ones are not. They don't really have an all-in-one, but they do have YMAG, which has 8 stocks, the Batman stocks. So basically the Mag 7 and Broadcom, I believe. Next, moving on to Bitcoin, guys. Like I already covered at the beginning, you have HBIX and BCCL. This is just pure Bitcoin exposure. They're basically writing covered calls on the IBIT ETF. They're both leveraged. Main difference, they're both not hedged to the Canadian dollar. The main difference is that this one has a 65 basis point management fee. This one has 85 basis point management fee, but this is semi-monthly distribution. So you're actually getting 2 distributions a month instead of a monthly distribution. And then you have the one that, in my opinion, is now obsolete, or I guess it's not if you really don't want the leverage. But if you don't want the leverage, there's also BCCC from Global X, and it's a 65 basis point fee, right? You just take out the L, put a C, and you'll get BCCC. And yes, it has 65 basis points. Whereas what's the stock symbol again? BTCY, this has a 1.1 management fee. So yeah, I don't, unless they and it has no leverage. So unless they reduce the fee, you might as well go with BCCC, in my opinion. They have the Ethereum one too, but I don't want to cover Ethereum. I just don't know enough about it to cover it. Maybe one day. And then you have HBTE, which I mentioned at the beginning during the sponsorship. The sponsor mentioned this is Bitcoin companies, Bitcoin leader companies, and it has the 25% leverage, which is great. A lot higher yield because, this is, to me, it's kind of the equivalent of getting the gold miners. And, these 3, you're buying the gold, kind of like that. So that's it for Bitcoin, the Bitcoin stuff. Moving on quickly to split funds, we cover Brompton and Middlefield real quick. Remember, they have an all-in-one now, so if you just don't want to deal with picking and choosing them, you could just take CLSA or Class A, which has pretty much most, if not all, the Class A shares in Canada. You're paying Brompton a 60 basis point fee to just give you that convenience, but there are still quite a bit of split funds that are trading at small discounts. You could see them here, right? 680 versus 703, a little bit of a discount there. GDV, same thing, 1098 to 1145. LBS at a discount. LCS still at a discount. PWI, tiny discount. SBC, pretty big discount, right? 1010, but it's worth 11. So some pretty big discounts out there on the split fund world. But again, just gets Class A or CLSA if you just want an all-in-one. And the Middlefield one, ENS, massive discount still. It's probably one of the biggest discounted split funds out there right now. Even RS, a small discount. Look at this, guys. Right, the NAV is pretty much 10, and you could buy for 972. Of course, this is as of June 4th. And then IS is also trading at a discount as well. So that is it, everyone. In terms of sectors, I don't really see any major sectors on sale. Nothing really stands out to me in terms of sector. Of course, in Canada, we have a million sector-based leverage cover call ETF from all the providers I talked about. So in case, you're ever, you want a specific sector, you like a specific sector, you could look into those. And by the way, I am planning to start a series called Covered Call ETF Battle. And I'm going to do each sector: utilities, oil and energy, tech, financials, and for every sector, I'm going to go through all the Canadian listed covered call ETFs and do a comparison between them. So stay tuned for that series. I have so much backlog, but I definitely want to start that series this year, where if you're looking for a particular sector, each particular video is going to focus on a particular sector, and I'll break down the differences between the sector specific covered call ETFs. I'm going to do the same thing for the US as well. So guys, make sure to check out the link in the description below. And by the way, please hit that like button. Don't forget to hit that like button, the thumbs up. It really helps. And please subscribe. We're about 3,000 subscribers away from 100,000. It's a pretty cool big milestone for us. So thanks again for your support, everyone. And check the video description below because there are still some one-on-one coaching sessions left in July. There's actually 4 left. They really go quick. So if you want to learn about the coaching sessions, the one-on-one sessions, look in the video description below, and also consider joining the PII Inner Circle membership because we're doing a live stream on June the 12th, a members only live stream June the 12th, where you could submit questions in advance I'll answer them. And in case you can't make the live stream, you could always watch it later, and that's for members only. So all the details, everything, guys, even the affiliate links, everything in the video description below. So make sure you check that out. And we're going to do this again this month. We're going to do this again next month, of course. So thanks again for watching, guys, and see you next time.